Good to see you again, John. Got a question for me? You could say that. Okay, this has been bugging me forever. What is the difference between the standard deduction and itemizing? Great question. So the standard deduction is a set amount. Sounds standard. On the other hand, itemizing can get you a higher deduction, but requires you to dig up some documentation. So cell phone receipts? Should I bring those in? Please don't. The only things that count are medical bills, okay, taxes, including state and local income taxes, real estate taxes, personal property taxes, etc. Got it. Mortgage interest you paid. Still listening. Donations to qualified charities. Solid. And a few other miscellaneous items. Okay, so which is more common? Standard deduction or itemizing? Ever since the changes in 2018, the standard deduction has become much more common. Why? Mostly because the standard deduction amount went up so much, but also because taxes got limited. How much is the standard deduction? The amount goes up every year, but for 2023, it will be $13,850 for single filers. That's not bad. And $27,700 for married couples. So what if my taxes, mortgage interest, and donations are less than that? Then you take the standard deduction and call it a day. What if my medical bills alone are more than the standard deduction? I'm glad you asked. Medical expenses are included in your itemized deductions if they exceed 7.5% of your AGI threshold. You totally lost me. What's AGI? Your income before you subtract your standard or itemized deductions. So I can't use all of my medical expenses? Put more simply, if you have lots of income and small medical bills, you probably won't be able to use them. But if I have less income and lots of medical bills, I can take them as a deduction? Exactly. Okay, and what about taxes? I pay a lot of property taxes, and those are going to be limited to 10 grand. Oh, yeah. You mentioned that. Now I see why the standard deduction is more common. Yeah, and there are rules around mortgage interest as well. Such as? Deductible interest could be limited if your mortgage is above $750,000. Wow. Also, if you take out a mortgage for large home improvements, that interest would be deductible. What if I wanted to take out a mortgage for tuition, investment purposes, or cash? Unfortunately, interest on those items would not be deductible. Good to know. Yeah. To reiterate, mortgage interest is only deductible if it relates to buying or improving a home. Sounds like I won't be itemizing this year. Did you have lots of charitable donations? Some. Why? That's usually what pushes someone into itemized deductions territory. Good to know. So at tax time, should I still bring in my property tax statements, mortgage interest, and all that other fun stuff? Yes. It doesn't hurt. Okay, will do. Anything else? What about the property taxes on my rental properties? Can I itemize those? Those will go on your Schedule E statements as rental expenses. They are separate from Schedule A. What's Schedule E? Your rental property statement. Ah. What's Schedule A? That's where your itemized deductions get listed. Like my cell phone bills? Just kidding. This has been very helpful. Glad I can be of service. That you are. So, you got places to be? Always. You? Of course.